We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up USD JPY. We are on a 12-month time frame. Price action last candle to right hand side is a bullish green doji cross. Taking a look at current price. So current price is sitting at 132.877. So if price action pushes up from this area, we are looking at price action to capitalize above the area of consolidation within the overall market. So price action would be headed up if it pushes up further to the top of that solid red and green of that consolidation that we did identify that the market is in. I should say the huge consolidation. And if price pushes down, it can tag to the bottom of that red and green. So market can make it down to the numbers of 76.151. And if price pushes up, it can head up to numbers of 143.291. And also we have in the middle, we have a midpoint. So it's at that midpoint within that middle, and that market can be landing, let's say, near the numbers of 109.913. So as we look at the market, we can see, and before the market even lands at that midpoint, it can land within the middle of the resistance in the midpoint. So let's say near the numbers of 125.461 before making its way down, and we can see that price action is reading as a retest or consolidation within that second last candle. So there's a few patterns that's going to happen in that area. So let's talk about it. So we can see that the price action candle is a bullish green doji. So that market is creating that consolidation. Okay, so we were waiting for that market to break out that area. We also can see that the price action candle is within that second last candle. So if we drive the top of that wick down to that area, we can see that that market did not break above the second last candle wick. And within that area, this is why we see that consolidation, because if we grab the second to last candle, that body, and we bring it up to that angle, that market is in a wedge pattern. Okay, so this is why we're waiting for that pattern to form for that market to push up or push down. So far what the market is reading is that if you look at where price is coming from, the low, market is coming from that overall double bottom. So we have that first, second, that second leg did break that midpoint, came back to retest, pushed up to a high with the second last candle. Now the second last candle is identifying it's losing momentum. And it did. And it dropped down back to, that will be second level highs, came back to retest that area. And so far as that consolidation, because price action is a doji cross or a doji style candle, so we waiting for that market to break above the doji, break below, or continue to consolidate within that area of the second to last candle in the market. Working our way down to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green doji. Second last candle bearish red doji. So this is what dropped the market down long up to the top. So that market did push up to a high, try to break the level, maybe try to retest to push up further, but end up dropping down with a long, leaving that long wick up to the dropping back down towards the level of the second last candle, third last candle of that body. And this is where we're waiting for that area to break up to see if it's going to be respected with the price action. So what it's reading as third last candle pushed up, had a slight little retest. So if you think about his retest the midpoint in that area, spike up to the high, lost momentum again, came back to that area again, and just consolidated. So this is why we see price and second within each other. So that's that consolidation, and we can see that overall consolidation of the third to last candle to the top side of that half of the third to last candle. We are receiving our consolidation. So the market is reading as it spiked up to a high, came back retest, waiting for the market to perform a pattern so we can take it into that direction. 3-month time frame reading as a bullish green doji cross. Doji style candle, still reading the same thing. Spike up to a high, lost momentum. Second last candle came back to retest, broke below the second level highs in that area. So it can be identifying as a double top. And if so, the second and third last candle would be considered the end structure. So that would be price action pushing up for that first leg with the third last candle. And then it came back again with the second last candle before pushing down. And if we think about adding a midpoint within that area, we have an M pattern. So M, market came down, came back to retest. Now it can drop down further, at least to the midpoint or break below that. And if so, it's coming from a double top and a retest. Working our way to the monthly time frame. So price action on the monthly time frame is reading as a bearish red candle side by side with the second last candle, third last candle, and the fourth last candle. So primary candle, we're looking for the breakout area, is the last candle in the market, which everything within that. So this is why we're having that consolidation. So the consolidation did break below that midpoint of that structure. If we add that midpoint line in that area, market spiked up to a high, came back to the second level low, broke down below it. So you could think of it creating some structure at the midpoint line if you put a zone there, so it can be respecting it. And if so, let's say if it respects the area, it will be identifying, and we'll take a zone and place it below that area. So let's say if the market is respecting those touches, so it'll identify as market spiked up, came back to retest, and if it pushes and breaks out, then we'll see that pattern for that first, second price action will be the retest, follow up with a bullish green candle that can push that market down. But if it tagged the second level of that area, second level highs, which it did, so it also can be identifying as a first, second, third, and market pushes down with the bearish red candle, receive a double top, and price will be into that area of that zone. Working our way to the weekly time frame. So price action, weekly time frame, bullish green candle did receive the engulfment to the previous side. So price action can be working its way up. Price action body is above the second last candle body. Price action wick is above the second last candle wick. So that's showing that the market can be pushing up further. Now, if not, if it is denied, so think about it being a midpoint. So if it's denied and it drops down with the bearish red candle, then you would know that it's coming from let's show that midpoint all the way over. So market broke, retest into that area. So you can think about it as overall first, second, third, retest, market pushed up. And now if it can tag that area, if it's the tag, bearish red candle drops down, markets come from a double top and a retest, 3 pushes to that top, which will be identified as a triple top. Walking down to a daily time frame, so price action daily time frame reading as a bullish green candle, spike up to the high side by side with the second last candle, bearish red candle, spike down to the low. So when you see these spike up to the high with the second last candle as price action, and you see it again with the previous candle, which we see with the second last candle, so that market's consolidation. So as we walk down a time frame, or it may be identifying later on as this being a huge doji style candle. So if it's a doji and we have a zone in that area, this will be a retest area. So think about it being a zone. So we'll just wait for the pattern. So if it pushes up, we'll see that first, second, third, fourth retest overall. Market pushes, breaks out from that double bottom in a retest. And if not, then it'll be denied. And we'll see if we can identify that on the 4-hour time frame. And if it's denied, it will be denied. It will see that area happen in the zone, which will be identified as multiple pushes to that resistance. So identify as first, second, third, fourth. Okay, price second last candle retest. Price could come back and retest again before dropping down. If price action pushes up further, it'll be identified as a double top, and then price in second will be a double retest, and that market could come down from that area unless it is respected and head to the top of that level of that zone. Easy breakdown, put a midpoint right through the zone, and we wait for the pattern to identify itself. Okay, guys, please study breakout and retest strategy, Forex pattern cheat sheet. Click on images, USD, JPY.